Greetings, ladies and gentlemen. Welcome. I am the Crypto Crow, and today I am with somebody I've been trying to get on this channel now for I don't know how long. It's been quite a while. I originally discovered this talent on TikTok. And because, as we all know, I love to just sit in the bathtub and swipe TikToks for an hour and a half. And I really started to get hooked on her knowledge and expertise in the market maker trading system. And so I reached out to her and I said, hey, I'm a huge fan. I'm a nobody on YouTube, but hey, I'm trying. I'm just this old guy that's been talking crypto for years. And I said, hey, I'd love to talk to you and learn more. And I'm interested in your course. And she's been so receptive and so sweet and so nice. And we've chatted on and off. And here she is, Annii from Australia, TradeTravelChill. I talk about you all the time. I'm so glad to have you.
Thank you. I'm so glad to be here. I appreciate all your kind words, and you're certainly not a nobody in the industry. That's for sure.
Well, I'm getting so gray, I'm starting to fade away like I'm in Back to the Future. So I just, I'm not relevant anymore, I guess. I tried that.
Hey, I'm gray too. I think we should make the gray thing a cool thing.
Are you really gray? Because it looks like one of those, you did that on purpose, like it's a style or something.
A lot of people think it's really funny because I used to dye my hair black, and people thought that was real. And then I let it grow out over COVID, and now they think it's fake, but this is actually my natural hair.
I'm shocked by that. Well, I guess it's a good thing you have better lighting where you are than I do, because I'm looking at my own image right here. I'm like, wow, this really looks creepy. So anyway, and you're in Australia, so you're just waking up, and it's 8:00 p.m. Eastern Standard Time. And what time is it where you are?
It's just turned 12 p.m. Yeah.
12 p.m.
Yeah, so lunchtime.
Oh, and you're just waking up. Yeah, okay.
Well,
I feel bad for that.
Be fair,
up at 6:30 in the morning for me.
Listen, to be fair, the best time to trade is on US time. So I have to stay up late here. And especially last night when we had the Powell testimony, it was with the market going sideways since Friday. It was just one of those days that you had to stay up for to see what happens. So it's not my fault. I wish I could get up early.
And there's live in the wrong side of the world. There's a lot happening, and I'm curious because I know something just happened within the past hour, and I'm curious to see how that affects the price tonight. Because like right now, it's technically, I mean, it's 8 p.m. my time, so there's nobody doing anything here in the States right now. But I mean, the retail traders, of course, but the institutions, I assume, are going to take their huge dive in the morning. I'm guessing.
Yeah, they're done for the day. Your US traders, institutional traders, would be done for the day by now.
Yeah, it's 8:00, and it's even so it'd be 4:00 in the afternoon in California. So I guess maybe they'd have. I don't even know. I don't even know if they end at 5 or 4 or what time.
They end at 5 p.m. New York time for the US session, but that's the major session. There's obviously smaller traders going on beyond that, but that's not what moves the market. We only really care about the US session that ends at 5 p.m.
So before we get into some of your knowledge of everything that you do in trading, how long have you been into this? You've been on TikTok now for what, a year or two, I'm guessing? I'm not sure.
Yeah, I was very quiet for a lot of my career because I wanted to just be a trader. I didn't really want to teach people or have a social media presence or anything. I just wanted to sit at home and trade by myself and be chill and be happy. But that's not what the universe wanted for me, I guess. So yeah, I've been trading since early 2017. So almost the beginning of that bull market, ran it into that bull market. Then after that, I took about a year off. So that was really just a hobby back then. And then came back into it and dove pretty deep into it. And the rest is history.
Before you discovered this whole market maker method, what did you just immediately dive into this? Did you see something and triggered this and said, okay, this, I want to get into trading, I want to use this system? Or did you dabble around with moving averages for a while and said, there's got to be something better?
Yeah. So what initially sparked my interest was I come from a family of investors, but they invest in the stock market. And my grandfather passed away and I inherited some shares. And from that, I was earning dividends. And just to get free money in my bank account was like, what is this? This is interesting, you know, like I would like more of this. I got this money and I didn't have to work, and that's great. So that was what initially sparked my interest. Plus, I didn't even know how to sell those shares or anything like that. So I went down that track first, which led me to then, you know, I just joined a whole bunch of investing Facebook group pages and was looking at comments. Sorry. And that's when I came across cryptocurrency. So I had no idea what it was, but I liked the idea of it, went down that rabbit hole, discovered Bitcoin and, you know, bought my first Bitcoin. It kind of went from there. But when I then decided to learn to actually trade it, I was just learning off YouTube. And so I guess we all start that way, right? We go to YouTube first. And I came across a trader who, he's not on YouTube anymore. And it's a real shame because he brought so much value. I'm not sure if you know of him, but
Jacob Canfield.
His name was,
I've met him a few times. Yeah.
Mm-hmm. Yeah. And he was just amazing at explaining things. And he was an EMA trader. So he would focus on that a lot. But there was just one video one day where he was talking about EMAs, and he flicked to another screen, which now I know was heat maps, but I had no idea what it was then. And so I saw this screen and I'm like, what is that? And he didn't explain it or teach what it was about, but he mentioned something about orders being there for the future. And immediately I went, hold on a second, like, I want to know what's happening in the future because that's where I'm trading. Like, why do I care about this chart on TradingView that is showing me data in the past? I want to know where we're going next. So logically, that just made sense to me. And, you know, I zoomed in on the URL, figured out what it was. And from there, because there's even to this day, there's really not a lot of education on heat maps. So I just had to then just play around, figure it out. And I started scalping a lot using heat map strategies. And it was pretty hectic. It was like a 12-hour a day apprenticeship. You know, I was trading manically nonstop. And I didn't really even know what I was onto then. Like I just logically made sense that I was trading and taking profit where other people were willing to buy. It just made logical sense to me. And then the big bear market started in 2017. Now, I remember back then, right before, you know, when Bitcoin was doing that big run up to 20K, we all thought it was never going to end, right? Like as you do in a bull market and people start calling 100K and whatnot. And it just kept going and going and going. And back then, everyone was talking about CMEs coming into crypto and how that was going to bring so much money. And that's why everybody was buying up and people were happy to buy at 20K because, you know, CMEs are coming in. And then the day it came in, the bear market started and we massively dumped. And so again, just thinking logically, I was like, what happened? That's not what we thought was going to happen. We thought it was going to keep going. How did all this money coming in dump the market? And that's when I went on the journey of figuring out, like, who are CMEs? What exactly are they doing? And the moral of the story is they don't buy high. So, of course, now it makes sense. They're going to come in, dump the price right back down and buy as cheap as possible.
And then later on, they took credit for getting rid of the volatility in crypto and you know, basically cutting the legs off of this dangerous thing. Yeah, and I read all of that, and it was so disgusting. But you know, also since then and through the years, I've realized that I'm a believer that the majority of the crypto price is algorithmically manipulated.
Oh,
and
it
that
is.
everything else is just like icing on the cake. It kind of like, we have news and articles and stories and things in the world that are happening and lights are shined on them, and then we like to blame them for the price action in the market. But in reality, I think the price action and where we are in the market is what dictates when a lot of this stuff comes to light.
Yeah,
And so that's what
absolutely.
I still feel that way to this day.
Yeah, I 100% agree. Everything that happens was going to happen anyway. We just find out about it afterwards when news comes out, and that news is used as the excuse because otherwise the manipulation would be exposed.
Yeah, and it is a shame about Jacob because the first time I met him and Mark Moss in New York. I think it was back in 2017, and I had won like my first like influencer award or whatever back then, and it was I don't fly, I don't travel well because I'm a giant ogre, and so the idea that I actually got on a plane and flew to New York was a really big deal, and I met them and a lot of other guys and gals out there, and he was a sharp tack man, and he used to be a chiropractor, and he had closed, I think he had like 6 branch offices or something like that, and when he closed his offices, he gave everybody XRP when it was like a penny.
Oh,
And he
really?
gave everybody like 100,000 XRP at the time as kind of a little,
Wow.
thanks for working for me, you've been great, like a little bonus.
Oh, how
And
nice.
yeah, and then it went up to where I forget where it peaked out, but everybody did really, really well on that. And it is a shame because I did always like him, and even what he was quote unquote, he not like the first crypto person to be quote unquote canceled, because I don't know of anybody else that's really happened to, and it was all
No.
based off of such stupid. It was a stupid
Yeah.
thing, you know what I mean?
I
Like,
didn't even know that he got cancelled. Like years later commented on one of his tweets and I just said, please come back to YouTube. And there was quite a lot of support on that comment, but I can't remember what he said, but the moral of the story was no. And then I was after that, a few comments on my TikTok said something about him. I didn't even know anything happened. I just thought he just stopped. But if that's what happened, like shame on the crypto community because we lost a good one.
yeah, I remember. I mean, it was basically, he was making these trades, but somebody had discovered that, if he might trade $1,000 or something, but then represent it as though he was trading more than he was. That's really all it was. I mean, which it's silly, really.
Who cares?
Either way, like either to kind of inflate the numbers you're trading with, or to get so huffy and puffy over the fact that he was like. But that was it. He didn't rip anyone off, to my knowledge. He didn't. He didn't do anything really shady. I think if anything, he was just maybe making the dollar amounts a little more grand to capture the attention of people, which the whole thing was a big silly, and I haven't seen or heard from him ever since. Like, he just just disappeared, and he's like, okay, if this is how the community's going to treat me after everything I've been trying to do for everyone, see ya, I don't need you. So
yeah,
now it's your turn to take that torch and lead the charge from there, right?
oh
So this is
Lord.
an opportunity for you, because listen, you're the only other person that I know that utilizes and educates on this system. And I think this system is extremely important, to the point where, typically if I try to bring someone on and it doesn't work out, or I get busy or they get busy, I just, well, it wasn't meant to happen. No. You're coming on this channel and you're going to teach what I see you teach on a regular basis right here to everybody. So, I feel like it's very, very important. So I guess where do you want to begin in this whole grand scheme of things? Where's the easiest place for somebody that doesn't know anything about it to say, okay, I'm going to be a trader. I want to start working on this market maker method, and I want to start using the same tools, and I want to wrap my head around everything Annii does. Where do we start with that?
Well, I guess just start by watching my channel, number one, because it's a whole different language, don't you think? Like,
Oh, it
it's
is.
not,
Which is why you're here explaining it to me yet again.
And I think the thing is, the main thing to understand is that 99% of people are taught to trade the same way when they initially learn to trade, which is what you can learn for free on Investopedia, what you can learn for free on YouTube, you know, you support resistance, your trend lines, etc. Like, and you need to know those basics if you're going to learn to then trade the other way. But the message I try to get across to people is, if 99% of people are taught to trade the exact same way, and for every buyer there has to be a seller, right? But we're all taught a uptrend symmetrical triangle leads to a breakout to the upside. If everybody would buy there, who's selling? Somebody has to be selling. And so you need to know, it's like chess, right? Or like, you know, or poker or whatever. If your opponent knew your hand but you didn't know theirs, they have the edge. So in order for you to have the edge in trading, you have to know who you're playing against. And it irritates me sometimes that people they learn to trade, but they don't take it all that seriously, and they kind of joke around about it, because this isn't fun. Like, if you want to learn to trade and you want to make money from the markets, when you are sitting here in front of the chart, you're doing business, you know, and if you aren't sharp about that and you're not thinking what is this negotiation that's going on right now? What are they trying to get from me? What are they trying to get me to do? Because they can't take your money unless you commit it, right? So they have to give you little hints and little fake moves to make you believe the market is going one way. They trap you and then they send it the other way. And if you don't learn to identify when you're being trapped, then this game that you treat lightly is just taking all your money. And what's the point? You get nowhere, you know? So when you come to a chart, you're doing business and you're in a negotiation. And what are they trying to do to you? And how are you going to win out of this negotiation? And the only way you can do that is knowing that they understand the move you're going to make, because they understand if they make price create a symmetrical triangle, they know what you're going to do from that, but you don't know what they're going to do from that. So you have to learn that if you want to make it.
So how do I know? How do I look at charts, and what other data points am I looking at to try and distinguish up from down, and you know, where the price is going and why?
So the first of all, sorry, the first thing is, the market maker has what I call a business model, right? It's a model that they always stick to. It's based on psychology. So they know how we think as humans, and it's based on that. Sorry, I've got a hair in my mouth. And so first of all, there's this business model, and market makers are given targets, and their targets are weekly, monthly, and quarterly, right? So in between that, they can do whatever they want with price within limits. But come that deadline of that target, price has to be where they've been told it has to be. So generally, they follow the same business model week to week. And once that's number one. You have to learn the business model, and it basically involves there's always a fake move at the start of the week. The price will go in a fake direction, and the point of that is to stop out everyone who traded over the weekend. Once that's done, we then go into a real trend, and it's a 3-day trend. And then we go into a midweek reversal, and that will usually happen on a news event. So if you back test it and you line up when price reversed on like a 15-minute time frame, every single week, you will see that it happened on a news event. And again, like we were talking about before, it's not because of the results of PPI. It was going to happen anyway. They just use that as the excuse. And so then they have this. Sorry,
that little tidbit right there is a great starting point for people to understand. So basically, you've got the retail traders that are trading all over the weekend, and they're placing their longs and shorts. And then you're looking at like a heat map, and you're saying, okay, the biggest concentration of, you know, whether it's long or short is at this price point. And then on Monday, you're getting a fake out where you're basically taking out one or the other ultimately, but you're taking them out and then you're spending the next 3 days marching your way towards the rest, right? So the goal is
Correct.
ultimately liquidate the highs and the lows if possible, and then you're using the media and whatever whatever else is going on as kind of a way to establish liquidity towards that direction.
Absolutely. And if you pay any attention to the media pre-news event, especially when it's a big one, you'll see a lot of articles come out, like they're either going to sound terribly bearish, or they're going to be, oh, this is like likely that's not going to be that bad this time. Whatever the media is saying and whatever retail believe from reading that stuff, that's generally the direction that the market's going to go in pre-news event. So, if we all think that the next numbers to come out are not going to be that bad, so the market will probably be bullish, you'll probably find a 3-day trend is to the upside. And then come the news event, they issue the sharp reversal and they take it all back. But here's what retail believes in that moment. Because of this 3-day trend and the media leading into the news event, the retail believe they're getting in early and they don't sell before the news event. And that's how you get trapped.
Oh,
because it gets taken back fast.
Yeah, that's a really clever way of looking at it, and I'm sure you can backtest this because and so when you go in, when you're like, okay, it's early morning, 12 in the afternoon for Annie, and you say okay, I'm gonna start trading. You're basically looking at the heat map. Do you start with like your heat map? Because I have that High Block Capital account, and I learned about that from watching some of your TikToks. I'm like, okay, I gotta get what she has. And so I got it. Like, I reached out to him and I said, hey, I want an account. And I've started looking at it. The only one of those I understand is the one with the really bright green, concentration lines, the horizontal. I'm like, okay, that I get. The other stuff, I have no idea what the hell any of it is. So I'm like, okay, Annie's gonna have to tell me what this means at some point. But so you start your day looking at that to see what's happening, and then you look at the historical chart at a 4 hour or a daily, and you see what happened first.
I start my day looking at a normal chart, because sometimes if I see those liquidation levels first, it can give me a bias, and I don't want that. I need to because like I said, there's a business model and you see that on the chart. So even without all the other data, you should know where you are in the cycle. So I start on a normal chart, figure out where we are in the cycle. And then once I have everything lined up, and, everything happens in threes. It's psychology of three, right? So if the market drops, it's going to drop in 3 sharp moves. If it pumps, 3 sharp moves. That's just how it is. And that's your midweek reversal. Then it goes the other way. And then we get trapped into a weekend and price does nothing. So, I figure that out, like what level are we at and how many levels do we have left? Where do I anticipate that we may reverse? Does that line up with a news event? So that's my first process. And I also bring astrology into it, which is a lot more complex. But if the astrology lines up with a news event, then that just makes me really, and also the levels, and then I'm like, that's it. That's where we're going to reverse today. And once all that's done, I then go to, so there's 2 types of heat maps. So the high block that you're talking about, high block shows us the positions that are already open in the market, where their liquidation points are. So we need to know that, because liquidation points and stop losses, that's the liquidity for the market maker. So like I said, they know what we're looking at when we draw triangles on our charts. We need to know what they're looking at. Well, all they care about is liquidity. So high block is an absolute game changer, because it's showing us that. And high block is only an estimate of where the liquidations will be, but it's very, very accurate. So it won't be down to the dollar, but it'll be around about that price, where we're looking for major levels that would just be an easy target for the market maker to collect, depending on what level you are in the cycle. So high block shows us the open position liquidation points, and then Trading Light. Well, there's heaps of heat map software, but I use Trading Light, and that shows us the limit orders that are currently in the order books that have not yet been filled. So you kind of use them together. So let's just say you believe price is going to break to the upside from where it is now, and you believe it's going to go to 25K. You would then go and see, do I have a lot of liquidations at 25K in high block? And if you have a really big spike, like, there you go, that's how they're going to get it. That's the target. That's the money that they want. Then you go to use trading light heat maps for the orders that are in the book. And what we're looking for there is a very high level of orders in comparison to what's around it, because we assume that's a market maker order because retail can't commit that much money at one price point. So what they will do is drive price up to that 25K example, and then the order that we're seeing in trading light is the reverse. It's where that's going to stop, basically. So when you're trading, you don't try to take the order there. That's the wrong way to do it. You would basically ride it up to and front run the large order that you see in trading light to get out before it sharply reverses.
So I'm on trading light right now, and it's such it's an insane amount. It's like flipping through screenshots, and I'm looking at all the data on here. It's absolutely insane. If I actually sit down for a weekend and I am going through your course, am I going to learn exactly what all this information is and how to use it in my trading?
Yeah.
Okay.
Yeah.
So I really am going to sit down and I'm going to do that. Maybe even this weekend, if my wife doesn't drag me off somewhere she tells me about at the last minute, which is pretty much how we roll here. But so I'm looking at this, and I like I said earlier, I'm always looking to make trades, if anything, because I love the challenge of it, and it does keep me kind of going. The problem is I've never been able to commit to a solid system. And that has been my biggest downfall. I'm an emotional guy. I don't know how much you know of me, but I used to cry a lot on YouTube, okay?
Really?
Yes, I did, all the time. And I still get emotional about the dumbest shit because I'm like this big ogre, but I do have a big heart, right? And so I can either be the mean badass or I could be the big teddy bear. And it's like, I prefer to be the teddy bear, but I sometimes I talk about things and I get emotional, right? I get triggered. And so I get really emotional in my trading, and it doesn't matter sometimes if I know exactly what's going to happen. I've even done videos where I say, this is going to happen. And then I'll psych myself out and I'll dump, and then it'll happen. And I'm like, son of a bitch, I did it to myself again. I know better, but I don't follow through because I get emotional too. So how do you handle trading in such a volatile world? And how does the market maker system help alleviate some of the anxiety and the tension and the emotional, like, I hope I'm doing the right thing? How do you deal with all of that?
That's an amazing question. So number one, the system is extremely rule-based, and that suits my personality. Before I was a trader, I've been a business owner ever since I was a teenager, and I always had business coaches, and my business coaches were always like, follow these 10 steps to success. And I was like, okay, just give me the steps, I'm good. So the thing I really like about this method is it's very, very rule-based, and if you don't have the criteria that meets all of those rules, you don't enter. It's as simple as that, because what it means is if something changes, it means the market maker has another idea and you're not smart enough to know what that is. So don't become a part of the trap. Just sit out, wait till it becomes clearer again. And so number one, the rules really, really help me. But number two is, once you learn, I don't know if it's a personality thing or just maybe all humans are like this, but to me, the way that I see it is, now that I have the knowledge, of who's against me and who's trying to take my money, it almost to me is like, I'm not going to let you, like game on, bitch. Do you know what I mean? So that's how I treat it. It's like, I know what you're up to when you issue that fast move. I know what you're up to when you issue that stop hunt. You're not getting it. So
it's the composite man, right?
For me. Sorry?
It's the composite man, right? It's that evil monster trader that's
Yeah.
basically always looking to check you out, take your money, you learn a little bit about that in the whole Wyckoff. I'm big on Wyckoff. And are you familiar with like the Wyckoff systems
I'm vaguely familiar with it. I haven't studied it, but I do like it. It does fall very much along the same lines of like, what is the big money doing to trap us before they send price in another direction? Those are the things that we need to focus on.
Yeah, so I have a Wyckoff schematic drawn out on my charts that I show pretty much every day, and so far it's been dead ass on accurate. Like since I laid it out.
Where are we in it? Because I had an idea. Can you show me it?
I just tried to share my screen before and everything went wonky. Let me see if I can pull it up. I can. Where is it? So basically, let's see here. I need to put it on a daily candle here. So we are basically at a point now where we are either going to form a spring, somewhere at a new low, or we're probably, my guess, honestly, if I'm honest, I used to be a big proponent of, we haven't seen the bottom yet. And granted, there's a lot of macro stuff happening that leads me to think it's still possible, but it's not as likely as it once was in my mind. And we're likely going to end up somewhere around 18,500 before we turn around, go sideways for a while, and back up to like the last point of support, and then and up from there as we head into the halving. So, but like where we are now, I mean, we're basically in what, phase C, I think. So, but there's the accumulation pattern 1, and there's the accumulation pattern 2. 1 is where you get a new low and a spring up to the test, so forth and so on. And then pattern 2 is when you don't get a new low or the spring, you just kind of come back down to a mid range, which in our case would be somewhere around 18,000 or so. And then you start chopping back up and sideways from there. So, and typically when you're looking at the Wyckoff system, at the start of the pattern, if it's bullish at the beginning, then that typically means you're in a Wyckoff pattern 2. If it's bearish in the beginning, that typically means you're in a pattern 1 and you're going to reach new lows. But ours is damn near horizontal all the way across. And basically says, figure it out, bitch. You got it. Have fun. So that's kind of, I'm like, oh, awesome. I don't think I'm going to know. I just basically, I'm waiting for it to play out one direction or the other. So, and I was curious if you used anything like this on more of a broader scale to kind of help you narrow down maybe what might be happening on the smaller scale, kind of zoom in over time and that sort of thing.
Well, the same model repeats on every time frame. So even with the Wyckoff, I can see the model that I trade within the phases of the Wyckoff. But yeah, the same model continues. So if I'm looking macro, I'm still just looking for my 3 levels on a daily or a weekly or whatever. And the thing is, the model feeds up until it gets to a point that the market maker has lent out all they can lend out. Because when we leverage trade, the rest of the position that we're borrowing it from the market maker, right? So they have limitations. They can't just lend out forever. At some point, they have to turn the market around to get that money back. So the model feeds up until the market maker hits that limitation. That's the one thing we can't know what that limitation is. We can only try to see it by learning the model and seeing it on the actual chart and making an educated guess, really. But according to that, we potentially still have level 3 to go on the weekly time frame. And it's not often that the model will feed all the way up to that, so I'm not entirely sure. And also level 3 doesn't necessarily have to be a new low. It can just be a repeat of the previous low. So I tried to look into a little bit more into Wyckoff because I found it quite interesting that I could see the model within Wyckoff. And I kind of pieced out a bit that it could be exactly what you said, that the spring is yet to come but I'm not an expert on Wyckoff, so I didn't really want to, you know, call it, I guess. Not that I would call anything. But what's interesting, the point I'm trying to make is what is interesting about it, and what's very interesting about what you just said is when you then go and match that up to High Block, they have like a heat map liquidation data that can go back 12 months. So it shows you all the liquidity that's in the market over a long period of time. There is a very, very high, four particularly high levels. Now, the first time when we dropped to 15,600, two extremely high levels opened up, and one of them was 15,200 and the other was 13,600. Now, since that has lightened up a lot. When it lightens up, that means that people are taking profit. So on this run up, people have taken profit, and so that liquidity starts to taper off. And if it keeps tapering off, it's not going to be worth the market makers to bring the price all the way back down there. So I kind of like that it's lightening up. That's a good sign to show that the bottom is potentially in, but it's still got more work to do. Besides those two levels, the next two is 20,800 and 18,600, which lines up with what you just said, right? Yeah, so yeah, those are definitely the levels to watch. However, at this point in time, 20,800 is definitely the strongest. All right, so in here, this is the liquidation heat map, and this is on the Binance exchange, but we only really care, it doesn't matter what exchange you trade on, we care about Binance because it has the highest volume. So we really only want that data regardless of where you are. And you can zoom out here for whatever time period you want. But just to explain it briefly, these lines that come out here are basically, depending on the color, it's a representation of how much liquidity is available. And you can see here how it starts from 0 when it's purple, and it moves its way, moves its way up to the yellow, which is a very high level of liquidity. So when you're looking at it at a glance, you want to identify where the yellow levels are. Now, if I zoom out to, let's say, a 6-month period, I think it's 6 months. No, maybe it's less than that. Let me do 3 months. Yeah, so when we zoom out to the 3-month period, see how yellow it is around this area and this area here? Those are the levels that I was talking about. So now we can zoom in on that and get the actual price. And see here, it said, I'm not sure if you can see that, but in the gray box at the top,
I see 20,800.
Yeah. So that's our first, and it's the brightest yellow in the whole heat map that we've seen. So that's telling us there is a lot of liquidity there. And, you know, for it's usually that would be a target when it's the next level from where current price is. So that's the first obstacle, if you will. If you believe that Bitcoin's going to go further down, like if you're still a believer that we're going to 12K, then we've got to get past 20.8 first. And that's a very, very strong level. And there's a good chance that we will not break it, and that's all the market maker wants. So that's the first level. Then if they do break it, the next level here is the 18.8 that we talked about, and that level is 18.8 to about 18.4. So it's a $400 range, which lines up with what you were saying about Wyckoff. So very, very interesting area, and would fall in line with the higher time frame level 3 according to the model. So that all looks good. But see, as I was telling you earlier, this level down here, the 15,200, that was bright yellow back when Bitcoin dropped to 15,600. Right after that drop, that was the bright yellow that we're seeing now at 20.8. So the fact that it's turning lighter green, which you can see here, means that it's that liquidity is drying up there, which only happens if people get liquidated, which we haven't because we haven't revisited there, or they take profits. So obviously there was a lot of very, very good traders when Bitcoin hit that 15.6. There was a lot of very good traders who opened up long positions. They've run it all the way up till recently and have now taken their profit. So it's not a case of, retail always loses, obviously. But in this case, we had some very smart traders who have taken their profits at that level. And that is why the 15.2 is lightening up. And then down here, this 13.4 to 13.6, that also used to be bright yellow and it's now turning into a green. So what I'm personally monitoring is that those two levels continue to lighten up. And I say lighten up, but it's actually darken up more towards this purple color, right? Because that is where the confidence comes that the bottom actually is in, especially if the 20.8 and the 18.6 to 8 stays yellow. That's where you're going to go, you know what, I'm pretty sure that that's the bottom.
So basically the yellow is would you say that in this system that the yellow acts as kind of a magnet for the price? So
the market makers, they don't care about what the price of Bitcoin is. They just care about where the liquidity is, because that's how they make their profit. So whenever there's a very, very large area at one price, that's what they're going to go for eventually. And you don't know when. They may not go for it this week. They may not go for it, for another 3 months or 6 months for all we know. But as long as that liquidity stays there and it's that bright, the market maker's greedy. They're not going to leave that behind. They're going to come for it at some point. But that's why you need to understand the software, because a month ago, at some point, we would have believed that they're coming for 15.2. Now that it's lightened up, it's less enticing to them. So, and the same thing could happen at the 18.8, that this yellow could start to lighten up. That's why we need to monitor these heat maps, regularly.
On that chart, when if you look towards the left where the peaks were around 25,000.
Yes.
Is the greenish yellow at each of those peaks, is that showing what the color was at the time the price met that area?
Correct. So see here how this is very, very yellow, and that one little spike there wiped it out completely back to zero. Isn't that insane? We're talking here about $40 billion.
Jeez. So basically they take that out and then that bar just starts to fade away into the darker realms of the abyss.
Correct.
And onto the next brighter color of the bright magnet.
Yeah. Yeah. And you can see here as well, it was lighter, and right after it was purple. They got everything that was at that level.
And now they're on their way back down to get the bottom two. So in your experience so far in these years of doing this, what would you say? Because obviously trading is significantly a point of probability in a lot of regard, right? Like, based off of different confluences and so forth. And then you can say, well, with a given number of probability of 82.5%, this kind of circumstance played out given these variables, right? So if I were looking at this and I'm seeing, okay, well, there's some real bright yellow down around 20,000. What is the probability that we do hunt that and we stop down there and then maybe we do get to 18.6? Because this is it's crazy that this is matching up almost exactly to what I've been saying in regards to, and I've been saying this for the past week or so, somewhere around 18.6. If we're in an accumulation pattern 2 in the Wyckoff, we're probably going to hit 18.6 or thereabouts, and that's going to be the end of it, and we're going to go back up and sideways. And now that I'm seeing this and it's saying, okay, the 15.5 isn't likely happening because there's nothing there, and there's a lot more activity above that $20,000, $22,000 mark. So it's more likely, given the probabilities, that we get down, we gobble that up, then maybe we come back down into the 18, and then we start working back up towards the 26,000 and so forth. So what do you think the probabilities are when you see yellow, that intense yellow in there? What's the general, like, do you ever see price ignore that? Or is it that, as price changes, that color just starts to fade to black and then we start establishing a new brighter color somewhere else?
Yeah, sometimes they do leave it, but like they'll come very close and they leave it behind. And in those moments, I'm like, I don't get it. But they obviously had a different plan. It doesn't happen often. They usually will get that level. But there have been times where they've come close and left it behind. And I either put it down to the fact that, as I said previously, Hype Block is an estimation of the liquidity. They can't know the exact price. So maybe the estimate was a little bit off, or maybe they left it behind on purpose because they're going to come back for it later. You know, that's also another possibility. So it really, you combine this with understanding where you are in the cycle on, you know, on a normal chart and the just the actual business model. But before we get there, I just want to point out one thing. If you look at this heat map and notice that the 12K is at 0, for everybody who believes that Bitcoin's going to 12K, there is 0 evidence on this chart to show that that is a possibility. So I just want to, and there never has been. So we have to keep that in mind. And let me show you something else that's particularly insane. On Trading Light, sorry, we can also use the spot chart, and I use the spot chart to get an understanding of where investors want to buy the dip, right? Because investors spot buy and hold. So when you use the spot chart on Binance and we go all the way down to 12K, see how that light, that's the only area that's red. And this is showing here at $12,000, 5.1, which is 5,100 Bitcoin worth of orders, whatever the Bitcoin price is right now, are waiting there to buy Bitcoin at 12K. But, and these are like, you know, buy the dip buyers, hopeful buyers, people, this doesn't mean we're going down there. This means people really want 12K Bitcoin still, and they've got their orders on the exchange in case we get a wick down there, you know, some sort of magical order. But there's nothing to show that the market maker has a reason at this point in time to take it down to 12K. Now, could that build?
It's like market trading in EVE Online, and somebody's waiting for a fat finger, and that way they turn around and flip it real quick.
Exactly. Now, look, it doesn't mean the liquidity can't build. Like if we broke the 20 and then we broke the 18 and it was just, you know, like a really horrible black swan event, sure, liquidity could build and then we could get to the 12K. But in this entire bear market, there has been 0 liquidity at 12K the entire time.
Wow, that really does put things into perspective. So basically, everybody that's out there thinking we're going to get new lows, it's based off of where the price is and the liquidity available at those price points. It's just not likely without a significant.
It's just not there. And like, you know, we get married to these emotional ideas. You know, when it was a bull market, we didn't sell because everybody was saying we'll go to 100K. You know, in the bear market, no one's buying because everyone's saying we're going to 12K. And neither of those like are going to hit. I don't like that. I try to remove as much emotion as possible and just go, what are the facts? And that's why I use heat maps, because heat maps are showing me the facts. Like, sure, I would love 12K Bitcoin because I would buy as much as I can. But the fact of the matter is there's no reason for it to go there at this point in time.
So what would it take for us from right now at 22,000? How much money would have to change hands to get us to that 18,000 mark? Because I think I saw somewhere that when we drop like 5% in Bitcoin in an hour, that was like $1 billion of the Bitcoin sold. So I'm curious what it would take for us to get to that 18,000 mark.
I'm not sure if that's actually like able to accurately calculate, because it depends on the positions that are open at the time, because the market maker has to meet the other side of everyone's positions first, then send the market wherever they want to send it. And the market maker, they commit as little capital as possible to meet the demands of the retail trader. Then when they're ready to make the big move, because they're accumulating while that is happening, when they're ready to make the big move, that's when they add their biggest position. But the biggest position is going to be dependent on what's left in the order books. So I'm not sure you can say, you know, it takes $1 billion to move the market $1,000. Do you know what I mean? I'm not sure you can have a blanket rule like that, because it just depends on what's
given
already
that the market's always fluctuating and everything. Yeah, I get that. So can you show us on like your spot chart what your try system typically looks like? Like if I'm looking at a spot chart and I'm looking for this rule of threes, what exactly does that mean and what am I looking for?
Yes, I can. So where should we start? We'll start with the weekly, because I haven't looked at that for a really long time. So the rule of three is price starts with, if we're going to have a downtrend, we start with an M formation. And so this was an M formation right here. And from there, we have three levels. On the weekly, now a level isn't necessarily one sharp candle. It does depend on the time frame. So in the weekly setup, it would be a number of candles. So you would consider this whole area here to be a level one drop, and level one that drops usually breaks the 50 EMA with volume. Sorry. These candles that I use are called PVSRA, and they measure the volume spikes between the candles. You can also get it down here. And what they're measuring is the increase in volume in comparison to the previous 10 candles. The reason we care about that is because when it's such a volume spike like that, that is, it's a 200% increase in comparison to the previous 10 candles, we assume that only the market maker can bring in that much volume, right? Retail can't do that in one candle. So that's why we use these, and these colors help us to know that this move is driven by the market maker. So we can see here that we had this big break here. After you have your initial level, price either just goes sideways and consolidates, or it retraces, one or the two. And then you have to learn how to read what is happening in that retracement or consolidation to give you a hint of what's going to happen next. So you can see here that price retraced on this occasion. And then we came down here for drop level 2. Now, ever since then, we've only been sideways. So if you're looking at the model, and we're under the 50 EMA here, which is still bearish on the weekly time frame. So when you look at the model, we would expect for there to still be a level 3 to come. Now, the thing is, like I said earlier, level 3 doesn't have to create a new low. It can just repeat a level. After that's happened, you then get the reverse with a W formation. I actually want to show you a different chart, because this happens. This isn't just crypto. This happens on everything. Let me just see if I have it here pre-done. What is this? No, that's the wrong one. Sorry. It's this one. Yes, it's this one. Okay, so this is the S&P, for example. So see how we created the M formation there? Then we've had this level 1 drop through here. We had the retracement, we've had another drop, and we're now having a retracement. So on the S&P, we would expect one more drop. Now, what I want to show you about this is on the weekly time frame, right? And the area of interest that you would expect the drop to come to is always a previous vector, because the vector, the colored candle, moves so fast that it empties the order books and it creates an imbalance. So at some point in time, that imbalance has to be rebalanced, and we expect price to revisit there to rebalance it. So you can see here, this wick here was not able to get back into the vector. And so as long as this green candle remains unrecovered, we would expect at some point that they're going to come back to it. Now, when I then go and compare that to the last recession, when this decides to load.
Well, that's loading. How are you getting the color candles that way?
It's an indicator called PVSRA. If you add that, it will just change it. Beautiful. So here, when we have a look at, so this is the last recession between these two gray lines, right? See how we had the M formation? Now, this gray line is when the actual recession was announced. So we actually created the M formation before the recession was announced. We had the level 1 drop, we had the retrace, we had a level 2 drop, we had the retrace, then we had the final drop. So 1, 2, 3 levels, created the W formation, and it was over, back into bull market from there. and it just repeats. COVID as well. Oh, do I still have this on? I actually chart. You know what? I'm going to find it in my Discord because I posted it just there and it'll be quicker.
I've tried so many times to navigate Discord. Even in my own, people get so pissed at me because I'm never in my own Discord group. But I'm like, you know what? There's just so much shit in Discord. I don't even know what to do with it.
I know. All right. So this is COVID. I drew this up for the community the other day just to show them. Now, COVID wasn't actually announced until, like, they didn't say it was announced until we're in the level 1 retracement. But you can see here, we had the M formation beforehand. We had the level 1 retracement. So the breakdown of the 50 EMA with the volume is level 1. We had the retracement. We had the breakdown level 2. We had the retracement. And then we had the massive. Now, this was Friday the 13th here in Australia. And look, after that, we got our W formation and we recovered. We were back at the initial price, like not too long after. So even in a massive black swan event, it still follows the same model. M formation, 3-level drop, W formation, 3-level rise.
Wow.
That's simple.
This is so good. I'm loving this. And the funny thing too, I can just sit and listen and watch you play with your charts for a few hours, like just absorbing all of this. And like, as you're just skimming through your charts, looking for one that you're looking for, I'm like, woman, do you have to sit for like countless hours drawing all this stuff out? And I'm like, everything looks so clean and nice and very specific. So this is fantastic. So I mean, and this is ultimately, like, what are some of the so you talked about the candle color changing setting, I guess, in TradingView. What others do you use that kind of help you navigate some of these things? Is that the bulk of it? It's just some EMAs?
If I'm short-term trading, I will use also, let me just bring up my normal day trading chart. I will use also the session times, which is my own indicator. And it's loading now, but it just marks the sessions here, these green dots. So it will just marks the sessions across the, sorry, not green, gray dots. It marks the sessions across the bottom so that I know what session we're in, and I don't have to do the manual, time conversion. I don't have to know what time it is in New York. Like, I just know that, okay, we're in Asia now, we're in UK, we're in US, because the best time to get a trade is in a session changeover. So you want it, and like you were saying before about time commitment, if you learn this method, you only need to come to the chart at a session changeover. And if you don't have your entry then that's it, you're done for the day. You just come back at another session changeover. I don't spend more than at most 2 hours a day on a chart, and I only trade Tuesday to Friday. So it's very, very relaxed. I look for the swing trade setup. So I look for my trend to start at the start of the week. I look for it to change midweek, and I take my profit Friday and I have my weekends off. That's it. So it's 2 trades a week per asset and I'm done.
So this is legitimately what you do all day. This is what you do for a living, is you travel all over the world.
Yeah.
And you haven't jumped off any bridges or anything, which means that your system must help, because I'm pretty sure I would have at this point. I don't think I could have emotionally handled. Do you remember back when Bitcoin and Bitcoin Cash was at war with each other? And into the wee hours of the night, they were going back and forth in price. I traded that back and forth for like 8 straight hours. It was like 4 in the morning, and my wife thought I was losing my mind. And I thought, I don't know. I think I'll stick with swing trading on like a daily chart. I don't know if I can handle that.
I think that is the journey of every trader initially. I think we all go through a period of obsession and not being able to leave a chart. But I think that's part of the apprenticeship. And I think it's a good part of the apprenticeship, because by you learn price action so fast, especially if you're on a smaller time frame. And eventually, whatever patterns you recognize on a smaller time frame, they repeat on higher time frames anyway. So once you're ready to calm down with your trading, it's not a matter of changing your strategy to trade less. It's just move to another time frame. And obviously there's going to be less opportunity, but if you want to be more chill, then you can do that, because you're just setting your alerts and not coming back to the chart till they go off, you know. This week as well, so the 3 levels that I was talking about, they can either stack, so they trend, or they can just be sideways levels. And this is what I actually drew out for the community yesterday. I spelt retracement wrong. But anyway, this is a sideways 3-level rise, which is a horrible trade to be in if you were trying to be in a trade. But look at this. Look at this. This explains the model perfectly. This was the weekend. Price went sideways and did absolutely nothing. Then we had the stop hunt to the upside. Why? Because over the weekend here, when price was doing nothing, people convinced themselves that it was going to drop. So they opened shorts. And where does retail put their stop loss? Just above resistance. So they would have believed that this here was resistance. They put their stop loss just above it. Come market open, or very close to market open, they shoot up fast to the upside, stop out all of those short traders. But at the same time, breakout traders have buy stops above here, because they believe that if price breaks resistance, it's going to move fast to the upside, and they want to be part of that. So at the same time that this stopped out the shorts, it also triggered the pending order longs, trapped them, then sharply moved price back the other way and took them out as well. That is a typical session start almost every week. Once the fake move is done, we have the W formation or an M, depending on which way it went. In this week, it was a W, and level 1, and remember I said to you, level 1 breaks the 50 EMA with volume. That's the green vector there. The blue EMA is the 50. That is level 1 rise. Retracement, level 2 rise, retracement, level 3 rise, and then we went down. Wow. Same thing every week.
That's nuts. I mean, there's so much to absorb here, and I think this is probably one of the most like educational interview segment videos I think I've done ever. I mean, at the very least, I mean, a long time. I mean, I find this captivating. I truly do, and I love learning new methods of trading. And just basically I look at trading and you know, understanding trading methods is so empowering in a space that is so typically dominant and dominated by, you know, whales, man, institutions, professional traders that like you, that basically, you know what you're looking for. And then you've got so many people that want to go in and they buy. Like I have a friend who just blows me up all the time. Anytime he buys some crypto and he's like, should I do it? Should I do it? I'm like, sure, why not? Average in. Like, what do you want from me? Like, I don't, you know what I mean? And it's like everybody is flying so blind. And I feel like this system is so strong. How about you show everyone your website and show them your course. Let them know where this is, because I would love for my audience that may have more time than me to dive into this course, and then maybe they can all train me in the comments when I make suggestions.
Sure. All right. So this is my website, TradeTravelChill.club. I don't sell my courses as like separate courses. It's all part of a monthly membership. And the reason that I do that is because I just don't believe that you can just do a course and know how to trade. It's an apprenticeship, like I said. So in addition to having our courses as part of the membership, we also have the community. I have a team of traders who all trade the same as me. I've trained them all, and we do market updates. We have live sessions. I'll just show you that quickly here. So we cover the Asia, US, and UK close almost every day. So this is our monthly calendar. So whatever session you want to trade, it's a 20-minute live video. You can come watch, get our thoughts on what we think is going to happen in that session, go off and trade it. And Yeah, so you don't have to attend them all, you just attend the ones that you want. And all of that is included in the membership. And then the course is here. So if you're absolutely brand new to trading and you don't know anything, you don't even know how to buy crypto, Zero to Crypto is one course that's available under the membership, teaches you how to buy, sell, move it to cold storage, and some basics of trading, just the very, very basic stuff that you need to know, how to place the trade on an exchange, etc. Then we go into the juice, the juice of the whole system, which is the trade by design system. So everything we've talked about today, the combination of heat maps, liquidation data, the model, the business model, that's all here in the part 1 trade by design system. So that's the course that we're currently redoing. We only started it a week ago, so it's not too late to learn it if you wanted to. Everything that we've already covered so far is recorded and there for you to watch in your own time, but the future lessons are currently live until the end of March. And then this here is just like deeper dives on the stuff that we talked about, heat maps, etc. And then if you want master classes on that system, there's this course as well. So all of that is in the monthly membership. They're not separate courses that you pay for. And yeah, and then all the support is in Discord.
Yeah, because I've been in your Discord and it's like a beehive of people just buzzing around, helping each other out, and I see you in there, and I mean, this is I don't know what to say other than I like if whoever is out there, whichever of you guys and gals out there that follow me religiously, listen, she's very legit. I've been watching her for a while. This isn't an infomercial. She has not paid me to come on here and pitch a course. I have been hounding this woman to come on and just share her insight with you guys and gals, because I love it. I love the content. I love when I see a new TikTok from you, because it's always good stuff. It's not like the majority of crypto people, you know what I mean? That they're like, just, exactly what I'm talking about. It's like everybody's trying to build an algorithm, not build an individual. And I feel like that is what separates you from a lot of people. You're really educating and teaching people things, what to look for. This is what I see. This is why I see it. This is how you can, and it's just like a boom, boom, boom. And it's always like a triple blow to the face. And then I'm like, well, shit, that was awesome. And I love it. And then I drain the tub and I go about my business, So, Annii, like, this has been fantastic. I mean, don't be a stranger at all. And I am absolutely going to be going through this course myself. I'm probably not going to be hounding anybody in Discord, because I still struggle with Discord. I'm like that old person that doesn't know how to use a cell phone yet. It's like Discord is cool. I know it's there, but I'll stick to my rotary dialer. But
luckily you've mastered Telegram, so if you need anything, you know where to get me. Telegram's
where it's at. I'm all day. Annii, seriously, it's been a treat. It's been a pleasure. Don't be a stranger. You come on anytime, whenever. You just let me know. And that's pretty much it for now, folks. Anything else that you wanted to pitch or talk about before we go?
No, just thank you for having me on. It's a real honor to be on your channel, seriously. And and just thank you for your support, because you're one of the people that have supported me from the beginning. I am still very much a very small creator, and and I know I'm a woman in the space, which is sometimes people don't take that seriously. So I just really appreciate when people such as yourself, like, are just so receptive and so positive about what I'm doing. And so thank you for that.
Absolutely. I call it how I see it. Man, woman, goat, I don't care. If you're good at trading, I want to learn from you. So it's all fantastic. And yeah, like I said, you're definitely one of the real ones. So I'm glad to have you. And for those of you guys and gals out there, go check out the course. Maybe you can teach me something in the comments of my own videos sometime. I'll be happy to learn. Until next time, guys, crow your coins. I'll see you again very, very soon. And you will definitely be seeing this in my upcoming 24/7 Best of Crypto Crow live stream that's going to be coming out here probably within the next 48 hours. So until then, I'll see you guys soon. Enjoy the rest of your night.